we're not trying to just buy Citigroup and realize that it's at one time it's below book value and their earnings are 10% of return on equity and blah, blah, blah. We're trying to find a company that is a $12 stock with $3 in earnings power, even though the estimate might be 50 cents. So you've got to come up with the name to begin with, the fact that it has a path to far better profitability than Wall Street recognizes, and then management has to execute over a 2 or 3 year period. That's not easy to do.
Do you think it's mostly the people, and this is open to anybody, it's the specialists who can identify that as opposed to the generalists? In other words, if you're a generalist like Bob missed A&F, possibly because he didn't know enough, maybe. But does it take a specialist like Larry, who seems to know these ideas, to really catch them? Or is it a matter of just luck?
I actually feel the one thing that was sort of missing from your question, it's duration. It's not only having the knowledge, but if I had the same thesis and were, for example, working at a hedge fund pod, my timing on this is so much more important. If you have duration and you don't have to have quarterly performance, let's say, it's so much easier to make that call. And actually, it sounds kind of weird, but you could actually have higher conviction in a 9-month call than you can in a 3-month call. And so maybe you don't know point A to point B, but you might have a much higher conviction on point A to point C. So for me, duration is a huge part of that equation.
I think that's actually such a significant comment, because I know folks say who like to short stocks, and they're much happier working at a family office, because at a family office, there's much less pressure, unless, of course, the family is difficult. But the issue of people watching this, people listening to this or watching this, most of them aren't working at hedge funds, and most of them are just doing their own work. And I think because so many people in the media, on television, and doing what we do, except not what we do, are tied to a fund, the wrong message sort of gets out there, and good ideas get buried, and people wonder why they didn't see something coming. It's because so many people were sticking with the herd. So Russell, if you're looking at something again like an HPE, if you had been long that at a hedge fund, would you by now have had your head handed to you?
Oh yeah, I mean, or it gets sold, right? I mean, we can just go and you ask about why do stocks move the way they do, and look no further than Jeff's space, right? Retail is universally hated because the consensus opinion is we're going into a consumer recession, right? And so when I look at the stock market, I always ask myself, what's the consensus opinion and why is it wrong, right? Because that's where you make money, is intention stocks, right? There's like when NVIDIA put up its first big quarter, everyone put out big short stories saying, oh, look, they're selling GPUs to themselves. This is all nonsense. AI is a fad. And it's doubled since then. So it's just about like, what are people thinking about and why are they wrong? And that's where the best ideas are. And
you, because you run your own money, you have the capability of staying with things much longer, because you sort of like, it's the old you eat what you kill, but it's your money at stake here. So you don't have to worry about the quarterly performance.
That's right. No, it's like when you talk about HPE, and the first reaction is, well, the stock hasn't moved. You're like, okay.